who are looking for members, and Richard is one of their newest members, and he loves it already. And let's try and get the show on the road. Okay, so it's all very difficult now. They said I should play a video of it before, because I don't know what I'm doing. Good. Excellent. Wow, good. Hi everyone. Welcome to the February edition of the Austin BlockChain Collective monthly community meetup, which happens here at Capital Factory on the third Monday of every month, always, apart from actually next month, because next month is South by Southwest, and we're not going to do it next month. There might be a happy hour happening that night, which, if there is, I will tell you about. But if not, you'll just have to stay at home and watch the TV. This is also one of the frightening things about Capital Factory is the podium here is fraught with danger. And even though I've got the regulation clips holding a laptop, it doesn't sometimes work. But anyway, thank you for coming. Say third Monday of every month here is when it happens. My name's Pete Harris. I am the co-founder and executive director of the Austin BlockChain Collective. And if you want to know what the Austin BlockChain Collective is and is about and what it does, you go to the website and you find that out. And we do great things. We're kind of a community for Austin, provide a lot of education, provide some ability for collaboration, etc., etc. Frankly, going to be changing our kind of focus a bit from next couple of months, but still very much centered around what's happening here in Austin and with blockchain. And with that, what else? We are very thankful to have some both financial and in-kind support from a number of the members of the blockchain ecosphere here, including a company called Factum. Paul Snow at the back will be speaking tonight about something called PegNet, which is a development that Factum's been working on. Also, a few other companies in town have been really allowing us to do what we do. So thank you to all of them. Also, actually, by the way, a few companies a little bit out of town, like Web3 Foundation. They're headquartered in Switzerland. What are they doing here? Because they know Austin's where it's happening. That's what they're doing here. So more about that maybe when I talk in the next couple of meetups in the next couple of months. Thank you for Capital Factory. I know I showed you the video, but they're a great partner to have. Not only do we host our meetup here, there are probably 4 or 5 other meetups in the blockchain space happening here. They are great partners to have. We work with them also, as well as having meetups here. We work with them on Austin Startup Week, which is a week-long festival in September. We put on a blockchain, or they put on a blockchain day that we help curate. We help their innovation council, which is made up of very large companies whose logos you'll see around the wall, and help educating them about blockchain. And we do a few other things as well together. So very happy to have them on side, as it were. A very quick shout out, next week, next Wednesday the 26th, if you are not at this event, which is the Blockchain and Digital Transformation and Health 2020, I don't know what you're doing in town. I really don't. This is going to be a fantastic event talking about blockchain and healthcare not just in Austin. We've got 40 speakers. We've got keynotes from IBM, guy from New York coming in, keynote for who's the dean of the health of UCSD, that's University of California, San Diego Health in town. She runs the informatics school there. We've got 20 blockchain health tech startups. We've got 10 presentations curated by Dell Medical School. And the theme of this day is actually, when you think blockchain healthcare, okay, healthcare, I don't do that. This is really about data. Healthcare is a data industry. And this is the really theme of this day. There'll probably be about 6 or 7 sessions throughout the day which really drill down on different aspects. The fact that it's actually not about people with scalpels keeping people alive, or wellness, or doctors prescribing pills. It's actually about data. If it wasn't about data, healthcare wouldn't exist, and none of us would actually probably be alive. So if you think that's a provocative statement, it's actually pretty similar to the one put out by the global thought leader for Ernst & Young, Pamela Spence. She basically has been saying the same thing for the last 3 months. And it kind of resonates quite well, I think, with me. So come along. It's very inexpensive. And in fact, if you register today, President's Day, you can come for $2.95. So it's a bargain. Next up, once we get that event out of the way, we're going to be having this thing called South by Southwest happening in town. A few things related to South by Southwest. If anyone would like to go to South by Southwest but would like to go to for about 30% off the list price, you email me, because I can do that for you. It's not cheap, I'm sorry. A list price platinum badge is about $1,800, but I think I can get you one for about $1,400, or about what 30% is. There are quite a few blockchain things happening at South by Southwest, and we wrote a blog describing those things, and it's there on Medium. By the way, if you come to our website, you can find links to our blog, our Twitter feed, our LinkedIn group, so you can find these links from our website. But if you go to that blog post, there's lots and lots of blockchain-related sessions, both official and unofficial, happening at South by Southwest, listed there, including a couple that the collective is involved in, one with which Karen Kilroy is hosting about blockchain as a service, and one which the Web3 Foundation is putting on with us in South by Southwest, which is talking about how Web3 is going to play out over the next decade. If you cannot afford to go to South by Southwest to see that session, which actually involves me and a guy called Gavin Wood, who kind of wrote Ethereum and has been writing things like Polkadot since, then we're actually putting on a free and open to all session featuring Gavin's co-founder at Parity, Jutta Steiner. That will be held at UT on the 17th in the afternoon, free and open to all. Come along. And I think she'll be covering the same kind of themes. So there are a few things happening. I think there'll be a few more things happening at South by. We'll update our blog about those things as we find out more. So should be a fun time. Good. Before I introduce our speaker for tonight, Paul from Factum, talking about PegNet and about Factum, it's traditional at our meetups to open up the floor to anyone who has anything to say, more or less, about anything. Could be blockchain related, but if it's not, that's probably fine too. Who's got something to say? If you're hiring, if you're looking for a job, if you need a front-end developer.
Oh, that's us. So I'm Adam Wiedemann. I'm with the City of Austin, and we are currently running a blockchain backed storage solution project, specifically focused on helping people experiencing homelessness get into services faster. It's utilized to back up their documents in storage, and then we use blockchain to notarize and make those documents legally executable, even though they're in digital form. We are hiring a front-end developer. So if you are one, or if you know one, and you and you want to join a project that is working for the public good, and all of the stuff that we're doing gets committed to open source. So you get paid to do open source, basically. Send them on. We're specifically looking for a React developer right now. And yeah, if, like I say, if you know anyone, please reach out to me afterwards. Thanks.
Thank you. And if you can't find Adam, just send me an email, because we kind of sit next to one another most of the time here at Capital Factory. So, Derek, you just arrived in town.
I just, good evening. My name is Indira Mysore. I just relocated to Austin about 2 days ago. Originally, I'm from Texas. I was in Houston for 15 years, and then I'm kind of ventured out into Midwest and was in Cedar Rapids, Iowa, and then Indianapolis, Indiana. Worked for some aerospace company, Collins Aerospace, and my recent tenure was with Roche Diagnostics. It's a Swiss biotech pharma company. I was there for 6 years, and when I was in Houston, I was with the Royal Dutch Shell, and then Compaq Computers, Hewlett Packard, and then did some consulting assignment in Australia, and I have done a lot of global assignment and jobs in Europe, and basically worked out of the 5 out of the 7 continents. So here I am finally in Austin, excited to be here. And I was in the healthcare space for about in the medical diagnostics for 5 years. Now, you know, blockchain really piqued my interest when I left my company, and I kind of did not want to take up the next possible opportunity that just knocked on my door, and I decided to do something very interesting. So I put in a lot of time and effort to educate myself about this technology, what it could do for healthcare, and I'm really excited about it. Got a lot of certification. I've got global program management, global leadership experience, customer business relationship management. So, well, I'm also part of the Austin Blockchain Collective, and working with Pete in organizing this event next week as part of the Director of Healthcare Community Development. And I'm also kind of doing learning journey in Medium as well. So I'm also exploring opportunities while I move into, because I've decided to make Austin my home. So looking for opportunities kind of to be in a leadership role in healthcare and blockchain, and wherever I could help with program project management, or I'm really excited about what this technology has to offer. So please feel free to reach out to me, and I'm sure all of you are. We are in this journey together, and I'm sure a lot of exciting things are happening here. Thank you.
Thank you. And you'll be able to meet Indira at Presence when you all come along next Wednesday to our great event here on the 26th.
Thank you.
Indira will be basically sharing an entire session. It's going to be hard. Okay. Anyone for anyone else? Any more? You want to be speaking in a minute?
Yeah, I know. I was just going to
hang on. Okay. Speak. Use microphone.
Just going to point out that at every Tuesday at 7 o'clock at the Central Market, we have the Bitcoin meetup, and it's largely slanted toward geniuses like Kevin and Karthik here, and Frank when he decides to show up. So it's a good group of people to get. Yeah, it's not about Bitcoin. It's all largely about technology, fintech, some economics. It's a really good group to come to.
Next one on North Lamar?
Yeah,
Yeah.
Central Market on North Lamar.
It is actually a really good meetup to go to and just hang out and meet some actually really nice people who generally are very open to helping you about things to do with cryptocurrency and blockchain, which actually you don't find an awful lot in the world. So yeah, I'd certainly recommend it. The very first meetup I ever went to in Austin when I arrived here was that, and it was at Central Market then. It moves around a little bit, but it's back in its original home. Any more before we do it? Yes, sir.
Hi, I'm Adam Bordelon. I'm actively seeking a job. I've got a background in distributed systems engineering, like large-scale distributed systems, Amazon recommendation algorithms, Linux container orchestration, and my idea is to go from distributed systems to decentralized applications. And so I'm really interested in what Bitcoin and blockchain and Ethereum can bring to that. Thank you.
Okay, thank you. How do people find you?
Me at Apache.org. Me at Apache.org.
Great email address. Wish I could afford that one. Okay. So unless anyone's got any more, I'm going to get on and introduce our main presenter for the evening, the legend here in Austin and across the world, I would say. Mr. Paul Snow from Factum, who's presented a few times here at the Collective before, but never on this very fascinating topic of something called PegNet. I actually got to see your presentation in California at the BlockChain Expo back in November. And I was I didn't know you were doing that, and I thought you were going to come along and talk about all this boring Factum stuff, but you talked about PegNet. I thought, wow, and so I was quite impressed. Luckily that we don't have to go to California, we can actually have Paul here in town talking about the future of something called DeFi. Are you going to talk about what DeFi is a little bit? That'd be good because, over to you, Paul.
Okay. And to just tap or the arrow key?
Yeah.
Okay.
More or less anything works.
All right. All right. I am going to give you a introduction to Factum. Factum is the company that Factum Inc. is the company I'm the CEO of. Factum, the protocol, is a distributed autonomous protocol that's run by 26 or 28 companies worldwide. I forget. I think it's 26 worldwide that run the Factum protocol. One of our goals that we have in the near future is to change the name of the company so that I don't have that explanation at the beginning of a talk. But Factum, the protocol in Factum Inc., this is about using a public blockchain to organize and secure data. So this is not about transactions or smart contracts or tokenization, though all those kinds of things can be done in a second layer on top of Factum. We basically parcel out that function of immutability and distribution of data from functionality like smart contracts and tokenization. So data is a big problem. And this is from a Harvard study that showed that the problem is like $3 trillion in the United States. What does the $3 trillion account for? It accounts for multiple data paths that you have to use to ensure redundancy, to make sure your data is good. You have to have mitigation strategies to deal with bad data. There's fraud, waste, and abuse that occurs when there's slop in the data and you can't authenticate the data. The real answer is all business decisions today use data from their database that they can't authenticate. It comes from wherever, but they can't, after the fact, after it gets in the database, tell you where it came from. Now I'm going to spin through this. That identity theft is a problem. Supply chain, problems of counterfeiting and diluting and diversion is a massive problem. And of course, transaction fraud, wire fraud, that sort of thing. And Factom is set up to do this. These problems, fixing these problems, are not really smart contract problems, and they're not tokenization problem. I can tokenize till the cows come home, and it's not going to ensure that exactly the right documents were executed in the right order in order to originate a loan. Okay, and tokenization doesn't help when there's multiple parties and there's not, a way to say this is a token, I'm going to bounce it between parties. It's really documentation. So traditional blockchains have a problem scaling because they have tokenization and smart contract functionality built into the lower level of the blockchain. Well, Factom is really just organizing data. Now, by the way, guys, I know you were here to hear the PegNet. And I know I'm seeing some people going, God, this guy is just going on about Factom, and I want to get to the PegNet. PegNet is going to be a data-centric problem. And so pointing out that the foundation that's underlying the PegNet is a data organization approach and a data integrity approach is critical to understanding how the PegNet can even exist. Okay, so I love the way PowerPoint gets converted into Google. I like those Ys. So scalability and secure it is really important. And that's the key to speed. Okay, so yay. We have two products. We have two products at Factom, and they're Harmony Integrate and Harmony Connect. Connect is really how do you access the blockchain with web services, and Integrate is how you deal with digital identity and all that. Has nothing to do with PegNet. This is just why we're so cool, okay? We have 26 patents. They're filed or issued. Some of our patents have blocked patents filed by Capital One and some other big companies because we got into patenting how documentation could be managed on the blockchain while everybody else was trying to figure out how to patent a smart contract. We have Department of Homeland Security with IoT security, and we're working with customs and border protection with supply chain, making sure that lumber is responsibly harvested and you know what the provenance of that lumber is. And we also did some stuff with the Bill and Melinda Gates Foundation to create medical wallets, make sure the right documents are in place. Again, none of this is PegNet, but that's okay. We're almost done. So we can only conclude that data integrity is one of the biggest opportunities of blockchain in the economy. Right now, we're not seeing a lot of blockchain adoption, but I think that's because most of the solutions people are putting out there are not focusing on what the real use case of blockchain is, which is prove that everybody involved in a business process is operating off the same data, okay? And that's Factom and Yay. Okay, so now to PegNet. So the idea with the PegNet is I have this system to create data integrity, and I can interoperate, I can operate with distributed people all over the world. They can record their data inside of Factom, inside of these organized sets, these things we call user chains. You can think of them as lists of entries. Transactions have to go into a particular list. Oracle price records have to go into a particular list. So we've got this mechanism to organize data, but there's no permission barrier to anyone wanting to collect market prices and submit them to the PegNet. And so we have this ability to create the first distributed Oracle for pricing. And the whole idea is to create a way to store value so you can take your tokens and you can have them reflect the reference prices in the market that you want exposure to. And then when you want to pay people, the PegNet will allow you to convert to a stable asset like USD, and you can pay people in dollars or if you prefer Mexican pesos. So right now this list is not complete. There's actually 40 assets. We have about 30 shown. We added some things that are missing, like the Australian dollar and Kevin, EOS, what? Tezos, a few cryptocurrencies and a few fiats that weren't in the list. This allows you to build a portfolio inside of the PegNet that reflects the assets that you want to hold. When crypto is making you nervous, you can shift to fiats like dollars and Swiss francs, euros. The Russian ruble was added. Boy, that makes me feel comfortable. And the yuan and some things like that. But when crypto's really hot and you're beginning to believe, gosh, this thing is really beginning to heat up, you can shift your assets to have that crypto exposure. And of course, who here has ever heard of gold? Okay, just checking. So gold and silver over there. We would like to have some other assets added to the PegNet over time. We went through the first exercise of adding 8 or so or 10 assets to the PegNet, so we're working through how we add things. I'm a real fan of pork bellies because I would love to be able to put assets into the PegNet and claim that I'm bringing home the bacon. I'm just telling you. That sounds sexy. It's never been done in crypto before. So the question is, how do you implement this? Okay, so now we have 40 assets. The way it works is that once you are holding some of these assets, these pegged assets, they're pegged to reference values in the market, you're able to convert them at the current market price from whatever you have to whatever you want. And what that does is it destroys the tokens you're holding and it creates the tokens that you want. And so when you have, I don't know, $100 and you want $100 worth of gold, you can burn your $100 at the PegNet altar and take home $100 worth of gold tokens. And it's value to value. There's no counterparty involved. It's accounting. The conversion rate's determined by a distributed oracle, and then when you want to pay, your nutty uncle in Utah, who only takes gold, you're able to send him some gold tokens. Okay, so it's serving as a payment rail. It serves as a store of value, and this is amazingly compliant because the conversions, because the issuance of tokens is all done by users. Okay, so that is a pretty interesting point about this. The PegNet was launched without an ICO. There was no raising of funds by printing tokens. There was no airdrop. Now, airdrop, I mean no hijacking an existing blockchain. So we didn't go to Bitcoin and issue everybody who held Bitcoin peg tokens. And that's looked at with some questions by the regulators. There's no issuers. There's no entity other than the users that issues these assets. You can burn a factoid into a pegged factoid. The factoid is the token in the Factom protocol. You can burn that token and create a pegged factoid, and then you can convert it to any of the other P assets. You can buy a peg, and then there's a relatively limited path to conversion of pegged assets into peg. But all your pegged assets, all those 40, you can convert at will to whatever you want, which means when you talk about liquidity, some of these assets we hold, like the Mexican peso, may not have a great amount of demand in the market. But when I want to liquidate that peso, I don't have to go find a buyer for peso. I can convert it to PUSD. As long as PUSD has liquidity, then I can move out of PSD into other assets on an exchange. I can bring other assets into the PegNet by buying these assets, But then if I have a need to give somebody pesos, even if they're the only people in the world that want to hold them, I can convert to those pesos, give it to them, and it's going to track pesos. So this is a way to create payment rails that conform to the region where the prices are being set. Okay? Running the Factom protocol has nothing to do with running the PegNet. There is a protocol in Factom that keeps everything you're doing in PegNet isolated from the nodes that are running Factom. They basically commit to writing data before they know what the data is. So they can't be making decisions about PegNet because they're committing to writing data that they don't know what they're going to write until the protocol gives them that data. And there are no operators. This all runs in software run by the user. So there's no servers. There's no PegNet servers that are validating transactions. All of the transactions are validated by all the users' wallets. So there is no central party. This is one of the most distributed protocols on the planet right now. Now, one of the cute things is this utilizes a RAM hash. Ethash has a strong RAM requirement, and it does make it RAM limited, but it also is relatively complex in some of its implementation, which allows my friend Frank to heat his home with GPUs because there's enough computational advantage in the GPUs for him to mine Ether, and it's not really ASIC friendly that much, but it's really GPU friendly. Well, we took that idea to the extreme. We do almost no computation in the LXR hash, and we are doing almost nothing but random byte accesses. And it turns out, Frank, I'm sad to say, your GPUs don't have as good a RAM caching as GPUs. Sorry, I mean CPUs. Computers, if you create a better way to access memory, you're going to put that in your CPUs. GPUs generally have more paths to memory, but they don't have any better random access of memory. So, sorry. This makes the PegNet highly distributed because you can't really build centralized mining facilities because you're just buying so much hardware that doesn't really do that much. But you can build mining pools where you get lots of people that participate, and this mining algorithm burns 10% of the energy of regular hashing. It's about, the machines that I use an i7, it's about 1.2 watts per miner. So a little less than your LED light bulbs. What's that? Yeah, it's not very much power. And then because your process, the miner, is always waiting on RAM, when you're running programs in the foreground, they just run. Because the way CPUs work is when a process is waiting on RAM, it does a task switch. So running the miner doesn't mean you can't use your computer. You can use your computer just fine. If you run 8 miners on a 8 virtual core i7, you can see some tiny bit of delay because they begin to reduce the caching of your programs, but they still don't reduce the caching of your programs very much. I accidentally did development on Factom for an entire day without realizing I had 8 miners running in the background. Okay, it's just it is something that can be distributed across regular people. And mining pools are really well set up. There's 2 different code bases that are open source. You can set up a mining pool, and you get your friends and family to donate money to you. Okay. Now, well, anyway, we'll answer some questions. So, how do you keep the assets at their peg on the exchanges? Well, we use arbitrage. When there's an asset that's above the reference value, in this case, we show that PUSD is in demand, but yen aren't, then you can take your PUSD and sell it on an exchange and buy the yen, right? Because you get a discount on the yen and you're getting a premium for the USD, so you get the difference. And then on the PegNet, you can at the same time convert your yen into PUSD to maintain your position. You end up with the same position you had plus some extra tokens, maybe extra tokens in PUSD or yen or Bitcoin. And so this mechanism allows the liquidity of any asset in the PegNet to maintain the liquidity of all other assets. And the other cute thing about this is, remember I said when you do a conversion, you burn what you have and you create what you want? Notice that in the case of the yen, you're lowering the supply of the asset that doesn't have demand, and you're increasing the supply of the asset that has greater demand. More supply kind of brings the price down, less supply kind of brings the price up. So there's a short-term fix because there's an action on the exchange, and there's a long-term fix where you're adjusting the supply to meet the demand. Okay? There's a liquidity arbitrage, and this is where the liquidity of one asset bleeds over to another asset, because when you buy or sell an asset in an exchange, it may some asset may move further or more in that transaction than another asset. And so this is kind of a complex thing, but the point is here that you can trade liquidity, and that prevents one asset from being an asset that drives the price of other assets, because the more you sell an asset or the more you buy an asset, the more you mess with its liquidity. And when you mess with the liquidity, you provide liquidity arbitrage opportunities to act against you in what you're doing to try to manipulate the real market. I'll leave that for now. It's a more of a theoretical thing. This is all about this is all we have about the PegNet. The real key here is that the implementation is pretty simple. The price oracles, which I haven't talked about much, they all the miners that are submitting prices go into a chain, the Oracle Price Record chain, call them OPRs, and all these OPRs are there to audit forever, because there are 200 or so records per block, and from those 200 records per block, you figure out who agrees with each other the most and has the most proof of work. And that's the top 25 you reward, and the most agreeable is the one that sets the prices. So the point is, anybody can add OPRs, anybody can do the proof of work against it. It'll all get measured against itself, and as much as distributed people around the world all agree what the prices are, the rewards are sent out. So if you try to manipulate the market by setting prices that are different from the consensus, you just don't get any money. You don't get any tokens. So that's how the distributed Oracle works. And it's been working since August 19th of last year. The actual entire implementation of PegNet took about 3 to 4 programmers or programmer equivalents for about 3 months. And that was about it. Okay, I'm going to open up for questions. I know this was a fire hose. I really threw a lot of information at you. Does anybody have questions? Frank?
First of all, we're talking about gold and silver. Are you pricing it off the futures market?
We're pricing it off of some exchange, some price collectors that report true gold prices, not paper gold, and true silver prices, not paper silver.
So are those 24/7 markets?
They aren't. They close on the weekends.
So how do you guys manage the time?
Mostly it becomes a crapshoot as to what's going to happen when the market's open. And if you go and you look at what gold and silver does historically when the market's open, there's a lot of very suspicious trading that occurs minutes before the market's open, and that inserts uncertainty. So it's not perfect. I would like to have 24/7 markets to draw upon, but it's hard to game because there's other people much bigger that are gaming the market more than you can.
Okay. Question number 2 is, when you have these peg assets,
Mm-hmm.
I know that I saw that you guys have a bunch of them on IDEX as ERC20 tokens.
Yes.
And then what are the other I guess I'm trying to understand
How that happens?
and
Yeah.
how that all works, and then if you want to send them, can you put them into Ethereum, DeFi, how does all that work?
Okay. That's a very, very good question. First of all, how many of you know anything about, or you would say you would make a C on a test on distributed exchanges? Okay, so we have a few C's. Anybody would fail the test? Okay, a few people. Decentralized exchanges. Decentralized. Centralized exchanges are just like NASDAQ and the New York Stock Exchange. And anybody who raises their hand and says they'd make a C if you had to explain those, you're lying because they're really complex. But, at least in my opinion. But decentralized exchanges are, and crypto exchanges are simpler because they have hard assets. So there's not as much weirdness behind the exchanges. But I digress. So a decentralized exchange is largely built off of Ethereum. Most of them are built off of Ethereum. And the way they work is the smart contracts allow the exchange to match one person who wants to sell with somebody who wants to buy. And then the actual exchange of the token occurs through a smart contract between those two parties. And I'm being simplistic, but hand waving, that's generally speaking how it works. So any ERC20 token can be listed on a decentralized exchange, and the market can hook up buyers and sellers, and those buyers and sellers can trade those tokens between each other. Some of the exchanges add their own blockchain so that they can wrap assets that aren't ERC20 tokens, and they can add some functionality that makes it act a little more like a centralized exchange where you deposit into those exchanges and withdraw, but all the actual trading is occurring in smart contracts on Ethereum, EOS. Decred has a decentralized exchange, and so forth. IDEX, though, uses just ERC20s. And so what Factom did was build a gateway, and we're in the process of deploying the gateway. And you can take your PegNet assets that run on Factom, and you can send them through the gateway into an ERC20 wrapped token. And what we did there is kind of interesting. We added Ethereum addresses into Factom. So when you move a Factom asset in an Ethereum-based address, it's a address in Factom, but it uses the same cryptography that Ethereum uses for their addresses. When you move it, it goes into an Ethereum address, exactly the same Ethereum address. And what that allows us to do to the regulators is say, you can't launder money with our gateway because all the assets that go into the gateway show up in the exact same address, just in a different blockchain. So there is cryptographically no way to change control or location by simply going through the gateway. I like that look. Does that make sense?
No, I get that. I think the question as a user I want to get a better handle of is, so
when we,
description of the overall
right,
system.
when,
You can get into it through PEG.
yes,
Okay, that's how you get into the system or factories.
factoids, or you buy assets.
And so then you have these assets that are in the PEG net.
Mm-hmm.
You move around in and it's very cheap and efficient. And then you've got, this is what I'm trying to understand, but this exit into ERC20 tokens.
Mm-hmm.
That is this gateway that allows you then to become ERC20 tokens that are now tradable in the Ethereum DeFi ecosystem.
Right.
Is there a way back?
Yes, because it works exactly the same way. You go to the gateway we we destroy your ERC20 token, and we move the asset into the Factom version of the same Ethereum address. So you can think of it as the Factom version of the address hits the gateway, the asset goes into a reserve, and an ERC20 that's effectively a node against the reserve gets put on the Ethereum network. You do whatever you want. When an Ethereum address comes back to go through the gateway, we destroy that, but it's cryptographically provable to reflect one of the tokens in the reserve. We take that amount from the reserve and we credit it to the Ethereum address in the PegNet world, and off you go.
So the reason I'm asking this question is you're talking about PegNet being payment rails.
Right.
The most liquid and used DeFi markets for all types of stable coins are Ethereum. So
Mm-hmm.
the anticipated way that these are going to be actually usable on a broader level.
Well, the payments in Factom are 1/10 of a cent per transaction. So there is a advantage to be in the Factom network, but you want to be able to utilize existing rails. And so the gateway allows you to use the existing rails in Ethereum. I don't know what an Ethereum transaction is right now, but it's 10, 20 cents, something like that. I don't know what it is currently.
So I'm trying to get the actual usage of PegNet
Mm-hmm.
in a real live, example where so if you do what you were saying earlier, you've got Mexican peso, you've got US dollar, you've got all these different peg assets that are floating out there. Eventually, that person who's getting paid in that asset
Mm-hmm.
will want to be able to use that whether it's a stable coin or something in order to then exchange with someone else within a network. And the reason I bring up the Ethereum stuff is that's the network that seems to be much furthest along where that actually might take place.
Yeah, you would.
Going back to fiat.
Yeah, but and you could get to Tether, which is not fiat, but there is ERC20 Tether, and you could sell your pegged asset for a Tether asset, and then you'd be able to liquidate your Tether. A lot more payment rails for Tether than what we've built so far. Now we're working to build other payment rails, but this is, by the way, this project is PegNet is built like Bitcoin. There are developers who wrote code. There was not a big ICO like EOS that can pour millions of dollars into the exchanges to get first tier listings and whatnot. So the listings are building. We're adding exchanges all the time, and they're getting to become better and better exchanges over time. So right now, that's why we want to go into the ERC20, is that opens up a lot more paths for liquidity.
Okay. So for someone to actually get liquid, they'd have to exchange PegNet. Well, one of the different tokens, whether it's PUSD, MXN, whatever the different tokens are, somehow get into Tether or.
Well, you sell it.
And then sell it.
Well, no, you sell it to Tether.
So then you'd end up with, because I'm trying to think of the economics of how the system works. You can only get in through PegNet Factor.
Well, no, you can buy the assets too, because you could buy the ERC20 tokens on the exchange. I mean, you could take Tether over, and I want Peg, and you have Peg, and you want Tether, or you want dollars. So I give you your Tether, and you give me my pegged asset. So as we increase exchanges, and as we increase more opportunities to move the assets around by buying and selling, you build liquidity. Kevin, you had a question?
Yeah, I was wondering when you were going to talk about no slippage, no fees.
Oh, yeah. Yeah. Well, yeah, every transaction in the PegNet is, generally speaking, 1/10 of a cent. You have to have a transaction that's over 1K for it to slip into 2/10 of a cent. So the transactions are amenable to microtransactions. So when you start talking about the unbanked, who don't necessarily have big money, and 20 cents on a transaction is a significant amount of what they're trying to spend, PegNet is well suited. It can move those assets. And when you want to convert from one asset to another, it's also a 1/10 of a cent. The market price you get is the market price of the next block, so you can't front run the market because you don't know what the price, when you put your conversion in or your transfer in, you don't necessarily know what the market price is going to be in the next block. Your fiats are all fairly stable, so that's really not much of an issue for payments. But when it comes to crypto, there's a little bit of uncertainty that prevents people from gaming the system. That's the cost. It's all inside your wallet. So unlike when you go to an exchange, even a distributed exchange, where there's some risk where, with trading somebody else, and somebody could have a bug in smart contracts and stuff like that, it's happened. Here, all the conversions are done in your own wallet. So there's no such thing as, the exchange cut off withdrawals or doesn't allow trades or something like that. It's all in your wallet. You have control. You have the keys. So there's a good bit of security around your store of value. Was there something I missed in your list? Spreads. There are when you're going to convert some number of assets. Let's say I'm trying to buy $100,000 worth of Ravencoin on some exchange. Well, when I put an order for $100,000 of Ravencoin, I'm going to push the price. I'm going to push it up, and it's going to cost me 10, 15% more, maybe 20% or 30% more than what the list price was when I put my order in. When you do a conversion in Factom, into the PegNet, the entire sum is converted at the market price. So there's not the same slippage and not subject to the same risk from spread and that sort of thing. Yes, sir.
So I think I get it a little bit. Let's say I was like a really good trader and I used the PegNet.
Yeah.
And I put like $1,000 USD. And then over a few months or so, I turned this $1,000 into like 50x. Oh, okay. Yeah. Let's say after I put $1,000 in this PegNet USD, and then just from my own wallet, I can trade through other PegNet assets, and I'm like a really good trader, and I turn that into like $10 million or something, right? And now it's time to like cash out. So I have let's say I trade it in like P euro, right? And now I want to like put it into Ethereum. I have to go like on IDEX to make this transaction to put it in Ethereum, or?
Well, you can go. You need to go to an exchange. As we add exchanges, we have a couple of centralized exchange, like we have Qtrade out of Kentucky, a little tiny exchange, but it is a centralized exchange, and a few others. We'd really like to have a Kraken. We'd like to have plenty of liquidity on the asset, but we're building. In some sense, if I compare it to Bitcoin, we're years ahead of where Bitcoin was 6 months into its launch. But, that's not hardly fair because at the time, nobody even had an exchange for Bitcoin. It took more than 8 months for Mt. Gox to show up and give Bitcoin the first market price. But the analogy still holds. We didn't set up a centralized entity that would be a target for regulators to build that liquidity on the exchanges, but it is coming. We have people that are investing and putting money in to the PegNet, basically distributed parties, putting their own resources in.
Is there a Security Exchange Commission oversight on this?
No. The problem with it being a security is the Howey test. And first off, the Howey test assumes there's a cell, but there's never two parties involved in a transaction in the PegNet until you're sending tokens to somebody else. As far as the actual issuance of the tokens, all the issuance of the tokens came from single party actions. They either burnt an asset that they bought on an exchange and created an asset in the PegNet, by burning factoids, or they bought something on the exchange and then did a conversion from peg to gold or something like that. But the conversion is a single party action. So there's no counterparty. So you go down the Howey test, all the software is run on everybody's wallet. So there's not anyone who runs a special piece of software that runs the PegNet. Everybody's running the same software. So it is truly distributed. There isn't somebody that's selling the tokens. So it's really just not a security.
So you mentioned a little while ago that, I mean, the fact that, any distributed technology, there is no central party, there is no intermediary. That's one of the big plus of it. But you mentioned early on, to some extent, the market dynamics depends on the futures market. What happens in the futures market. So is there to some extent pegged to what is happening in the commodity market, the dynamics of how it works? So is there dependency on it?
There's dependency on the ability to extract prices from the market to drive the transactions inside the PegNet, yes.
What happens there will influence the behavior here?
Right, but the commodity exchange regulates contracts that between parties concerning commodities. Well, there's no contracts here, so there's nothing really to regulate. And I've sat down with the Commerce Committee in Washington, my last trip there, and we were talking about some of the proposed regulation to make certain things securities, even though they don't pass the Howey test. There would just be a rule. These things aren't securities, right? And we were talking to them, and we were like, the SEC is coming in and taking what the IRS is calling commodities and declaring them securities, and they're taking your turf. And one of the things they pointed out is, well, we see that, we appreciate that, and I think we might want to oppose that. But on the other hand, most of the activity on these tokens has no contracts and it has no market. And so we don't regulate it. Even if it's a commodity, most of these transactions just don't. They don't have the contracts required. So commodity, when you buy bacon in the grocery store, the commodity laws and regulations don't apply because there's no contract. You're just buying bacon. So a lot of crypto looks like that. Yeah, you might have more. Okay, that's close enough. Okay, there is a developer fund. There are tens of millions of PEG that have been donated by people that have the asset, and they donate it to the developer fund, and they provide those tokens to developers that contribute to the protocol. Completely driven by what people want to donate. There's a web page where you can see developers by name, and you can contribute to a developer that you particularly like. But there's no centralized organization involved in that. Is that close enough? Yeah. Okay. And if you just do web searches for most of this stuff, you can find it. And if you want to donate to the cause to deploy the PegNet, then there are ways to donate anything. You could donate Bitcoin or something like that. You might just have to reach out to somebody like Kevin to help you with that. Is that fair, Kevin? Yes, sir.
As a developer, how do I get a piece of the developer fund?
Well, you do development and make sure that.
Wait for me to find open source tasks that I can jump on.
Yes, there are some bounties that are being posted, and there is a bounty platform that I believe is multi-platform. I didn't chase that link when David put it up there. At the risk of being just absolutely wrong, I believe that what I read 2 days ago, is that they started listing these bounties in a platform for developers to find bounties to pick up, to get donations from more than just PegNet. So if you search for PegNet bounties, I think you will find that list, and you can look at something, see if you can pick it up. Yes, sir, Frank.
I want to talk about the PEG token and explain a little bit about all the good stuff.
Yeah, the PEG token is the one token that doesn't have a reference price, so it floats in the market, and because it floats, it can serve as a platform for arbitrage against the other assets, even if all the other assets go down or they go up. We're kind of experimenting with how to manage that, because there are some, and I don't want to get into the details, but if you go on the forums, you can read about them. There are some liquidity attacks that somebody might execute, and we have some safeguards that we've implemented with that, and it intersects with the ability to do some of the arbitrage. But generally speaking, that's the way it's intended to work, is to use arbitrage to maintain the reference value. In the end, you have to have one token that's set, its price is set in the market, because all the reference tokens, there's nothing mathematical or using cryptography that I can force them to be recognized in the market at the right price. So is that close enough? Go ahead.
Well, can you also explain, because I know a little bit about the block rewards, just 10,000 pay,
Oh.
and then 5,000 goes to the miner, and then like, can you explain
Yeah.
how it works? 'Cause
Okay. Every block rewards 25 miners. So every 10 minutes, 25 miners get paid. So the payment rate is a little more than a miner per minute, averaged out. And the 5,000 tokens are split across the 25 best miners, graded against each other. And then for those that don't want to mine, but they just want to convert assets into PEG, there is a budget of 5,000 tokens they can convert into PEG. So if you have PUSD or something like that, you can convert into PEG. Now, because there may be more demand for PEG than the 5,000, you take the amount of money everybody's trying to move into PEG, and you issue the PEG proportionately and return them the change. So somebody wants to buy $250,000 worth of PEG, and they put up that much asset, then they'll probably get most of the 5,000 PEG, but they won't. They'll still have their money. So it's kind of like a stake that gives you, as in proof of stake. It's kind of a proof of stake model for distributing PEG, because the people that have the most stake and are applying that to the conversion, they're the ones that are getting most of the PEG. And we use that for the guys that want to arbitrage. They have basically enough tokens to ensure they have PEG to turn around and arbitrage with.
So that 5,000, just whatever of that 5,000, if there's more demand for that 5,000 peg than there is available, it just keeps going block by block, and every
No, in that block, however many people ask for it, they get a proportional amount back. And then in the next block, so let's say I use 250,000, and I say I'm going to convert $250,000 into PEG. And let's say that's 99% of the market. I'm going to get 4,099 something PEG, but the balance of that asset, that PUSD, is still in my address. It's just that weight of value gives me a bigger portion of the 5,000 distributed.
The person who's trying to convert, like
Yeah.
USD into PEG, let's just say that was $200,
Yeah.
and of that, the 5,000 is only going to represent $5,000.
Yeah, okay, yeah.
More than that, maybe.
Sure.
So they have to just keep every single block doing the same trade, and so it's this long, painful process to try to get.
Try to get peg, or you go on the market and you buy it. And there's usually some millions of dollars of peg, or millions of peg available to be bought on the market. So you can buy the peg.
But if you're in the peg system,
Well,
you can't get out. That's the only way out of the peg system.
no, you can sell any asset. So all the assets can be listed on exchanges. And so you can take your PUSD on the exchange just like I can take Tether, and I can buy Bitcoin with it, as long as there's enough liquidity to get what I want. And that's, of course, why we have such a focus on building liquidity and building listings on exchanges that everybody's using. And then once we have enough of those, then we can go to market-type liquidity providers. Like AppBrilliance has a partnership where if we got to a certain bar on liquidity, somewhere in the market that they can access, then you could have a transaction you execute against your bank account, and it just gives you the asset you want in your peg address. You're not kind of like when you go to Coinbase. Has anybody gone to Coinbase and just bought Bitcoin? Okay, that's a market. It's not an exchange, it's a market. Then you can go to GDAX and you can go into a market and set your price. By the way, buying Bitcoin like that in Coinbase is a bad idea. You pay a fee, and then on top of it, you pay a spread, and then the spread is generous. Much better to go into GDAX and put a market order out. Helpful hint.
I'm trying to understand a lot of token economics. So the only way to get into PegNet to actually expand the asset pool is PegNet.
The pegs.
Well, because help me understand. So factoids, you can get in with factoids, you can convert to the PFCT, and then you can then exchange. So
Right.
that's a way to expand the overall pool.
Right.
Same thing with peg tokens. So those are the two ways to actually increase the overall trading pool that are available, right?
Right. If you are going to, there are two ways. When Bitcoin ran up to $10,000, everybody holding Bitcoin now had more value of Bitcoin recognized by the peg. If they convert out of that to other assets, then they can, it's the trader guy who's really good and he can always make the best trades. He can ratchet up his standing within the PegNet. So you can trade, you can mine. If you mine, you get peg, and you can take your peg and convert it to assets. And then you can buy factoids or buy any of the pegged assets. If you buy factoids, you can burn them into the PegNet. But everything else, you can just buy the asset on the exchange.
What I'm trying to understand is, and maybe I'm not getting it, theoretically you would think that the asset pool, obviously you can have an increase in values of the different assets relative to each other.
Mm-hmm.
But when you're talking about Bitcoin in dollars, if Bitcoin goes up,
Mm-hmm.
then there's an counterbalance of, okay, well, the dollars relative to Bitcoin goes
Mm.
down.
Mhm.
The question is really, what's it all relative to peg? Because that's the only onboarding way, that's the only way in to increase assets in the PegNet, right?
Peg and factoids.
Peg and factor. So those are the only two ways to actually bring additional capital and expand, what I would just call organically as opposed to like with using an asset.
Yeah.
The asset pool, right? Am I getting that right?
You are, yes.
So that would mean that right now.
But you can buy other assets. So you can buy PUSD. So there's a pegged asset of gold or rubles. You can go buy the USD and rubles. From your perspective, you're in the PegNet. If there's 100 million rubles for sale, and you bought dollars worth of rubles for sale, and you bought $100 million worth of rubles for sale, you just got $100 of rubles in the PegNet, and then you can go convert them to whatever you want.
But I'm less concerned with that. I'm trying to understand.
You're trying to explain
How it
inflation.
grows. Yeah, how it grows and what's really going to be the determining factors. Because going in, I can see that.
There's only three things that cause inflation.
Okay.
Mining,
And that's 5,000 blocks.
conversions, and burning factoids. Even buying peg doesn't create inflation. It just pushes the price up. So burning factoids, mining, and conversions. That's it. It's the only way to increase the, to actually, take something from the outside and increase the value.
The mining component increases the circulating supply of PegNet at a fixed rate per time interval.
5,000 peg per block, and blocks occur every 10 minutes. And you can convert up to 5,000 tokens, but you're competing with the market.
The reason I asked those is because if you for 10,000, I'm like, hey, if you bring me up, I'm going to get.
I know. Well, at some point we're gonna have to cut it because at some point it's just.
All right, you and I can go offline.
Yeah, we can kind of go offline on it because it's a little too much detail. How does Austin want to use the PegNet?
I don't know. Is it a? So I have a different question. Pete had referenced the Factom stuff as the boring part, but that's actually the really interesting part for me. Fair. With the PegNet, is Factom Inc. shifting the focus of development away from Harmony and Connect over to?
No, it's not. So the PegNet is a independent, separate project. So Factom Inc. focusing on the PegNet is kind of like Blockstream focusing on Litecoin. I mean, Litecoin did gen itself from Bitcoin. A lot of the research, like Lightning Network, done on Bitcoin has been applied to Litecoin, but it's not what we do at Factom Inc. So now we have contributed developers, and we did contribute the idea, but the reason that we did that is the better the reputation of Factom, the protocol, the easier it is for us to get our clients on Harmony. So it's a strategic move to put some resources into that. But we've never really put more than a fraction of a developer on PegNet through the entire development. There are other parties that have put developers in, and the collection of them implemented it. But there's no organization. So on the Factom side, as far as you guys are concerned, well, Factom organizes data, and it creates a means for you to write code in languages that are easy to to develop in with your code base or with your contractors. And they can implement just pretty much standard code that reads data on the blockchain and does what you want it to do. So if you want to try to distribute medical records on the blockchain, well, I can sit down with you and show you pretty easily how you can increase the privacy, increase the availability to doctors when doctors need the information, but also partition the information so a doctor doesn't get information they don't need, like billing information or maybe police records, if there's, or some drug abuse records, past 5 years or whatever. So that was really important in South Africa when we were working with the Gates Foundation, because there are certain diseases that have stigma, and it's important to protect the patient from a reputation hit when they go to a clinic and they either have or they're tested for AIDS or malaria or cholera or, hepatitis, pick a letter, that sort of thing.
I would very much like to.
Okay, excellent. Yes, sir.
I have a question on the CPU mining. It seems like it would be fairly easy to 51% because you can just on demand AWS rent a whole bunch of 40 gig machines, or they have 120 gig machines, attack it for 30 minutes or whatever, and then.
Yeah, I mean, with the blockchain being smaller, as you get more miners, it becomes more secure. So as your hash rate goes up, it becomes more secure. You can 51% attack any blockchain if you can deploy the resources necessary to do it. That said, large instances on cloud systems do you no good. You really only need 2 gig. You need a 2 gig and a minimal Linux instance. Okay, so probably the smaller. And then most of Amazon runs DDR4, and DDR4 is better memory, but it's actually slower in random byte accessing. So DDR3 memory actually beats them. So your ideal platform isn't the cloud. It's actually octa-cores, ARM octa-cores. They have 8 cores. They run on a little tiny board like this, and they have caching on a per core basis. And it runs a octa-core in a 4 configuration system, can be bought from some UK company for about $220. And it's equivalent to an i7, medium end i7. You don't want the high end i7 because they'll have the better RAM, and the better RAM is slower. You want the lower end i7, which is the fastest. And then your i7 is beating something that you're paying $100 or $200 a month on the cloud for. So you can have X amount of mining for one payment of $220, or you can pay $100 to $200 a month for about the same throughput. So the RAM hash is actually pretty hard to economically attack. That said, most of the mining that's coming out of China is doing it in the cloud. The economics doesn't look good for what they're doing, but that's what they're doing. So I can't say that no one will do it. The ease of mining in the cloud is you just run the instances, as you know. Now, there's another question for you. Is like, when is Kraken going to list PEG?
No comment.
Okay. Anyway, any other questions? Because I suspect we're getting kind of to the end of what we really need to talk about. So,
how many exchanges are you working with now? How many exchanges?
How many exchanges? Do you know what the count is, Kevin? 7, I think. 7, 8. And then on some of these exchanges, we have different pairs. So a lot of the exchanges are kind of questionable. We're on Hotbit, but that's not really, they're kind of bouncing around. They're not really quite doing what we'd like them to do. But if you go to pegmarketcap.com, I can throw it up here. Linux user detected. How do I type on this stupid thing?
It's a Mac. You can't do anything on a Mac.
You know, I don't know the Japanese stuff, right? Is this? Oh, it must be over here. Peg at market cap. No, that's a search in the stupid thing. That's not even a browser. What do I do for a browser in this world? Something that looks like Safari.
Just click on the link.
Click on a link. Oh, you guys are brilliant. So there's going to be a peg market cap. Yeah.
It's there on the slide.
Yeah, it's there on the slide. Yeah.
Yeah.
There we go.
And you'll make the slides available, so we can.
Yeah, I'll make the slides available.
Yeah. So tomorrow we'll pull up. There'll be the recording of this session, including full disparaging certain exchanges, and there'll be these slides with various links. So.
Yeah.
Do you have any?
So here you can look at the assets. You can dig down, and like if you hit the exchange price, then in the exchange price, it'll throw up a tab.
Yeah, sort of.
Golly, what's with this browser?
It's Safari.
Ah, there we go. it had a finger, and I thought it was a little spinny thing, but it wasn't. So these are all the exchanges that run the peg. All the guys that have the node, this is because they don't have volume that we feel like we can trust. And so there's a few pairs that are good, and then there's some that aren't. And some of these pairs that are not reflected depend on volume, and sometimes the volume occurs in certain times of the day and doesn't occur in other times of the day, so they drop in and out. But anyway, this is, you can dig around inside of the PegNet market cap and learn all about the assets and what they're doing in the market. This is a really great site done by Factimize company out of Arizona. Okay. Well, thank you very much, Pete. I really do appreciate the opportunity to speak.
Thank you, Mr. Paul. Thank you for coming along and talking about PegNet and explaining how Factum is no longer boring. Thanks everyone for coming. I know we got quite deep there. There was all this DDR4 versus DDR3 RAM. You're really saying the old RAM is faster than the new RAM?
Yeah.
Jesus. Okay. Yeah.
RAM is optimized for serial access because that is how
Right. Yeah. I don't want to know that. I just want to know this world is really screwed up. Sorry. Thank you for coming. No meetup. No